Hello everyone, and I hope that you're well, and I am back with another video. There was so much positive feedback on the last one, and as I promised, I'll do a breakdown of that previous week's video. No, yeah, the previous week's trades breakdown, so you can go back and compare what you've done and compare to what I've found, just to solidify what you've learned from the first video. Now, at this point, if you haven't watched the first video anyway, which was released Sunday, last Sunday, today is what, Friday the 4th. Yeah, if you haven't watched that, you have to watch that before you watch this one, otherwise it won't make too much sense to you. However, I will go over the premise of the edge itself again, and then we'll just go into the days. And what I'll do is, it's not that just so it doesn't look like I'm cherry picking trades, I will go through each day by day as like a snippet, rather than constantly scrolling, going through and making the video longer than needs be, just so it's clear and concise for you guys, and it's just easier to watch, and it's a bit more of a compact video. But yeah, I'll show obviously every single win, every single loss. Now, the thing I didn't touch on in the last video was your loss limits, and that's when you talk about risk management, which is a complete separate topic. But my risk management is 2 trades max a day. So that means I either take a win, or I take 2 losses, or I take a loss and then win. That's the outcome. If I take a win, I don't take any more trades. That's the end of that session. And another thing to remember is what I mentioned in the previous video is when you have your session, essentially we are looking for the sessional move, which obviously is not always this impulsive, but we are looking to catch this move from there to there. And it's only going to be a couple of pips, not a couple of pips, it's like 10, less than 10 pips a lot of the time. You're looking for this sort of impulse. Sometimes you get impulses 10 pips and plus, which is fine, but the average movement that we're looking for is about 25 to 30 pips in that session. So generally, we're just trying to catch a third of it. So the reason why I mention this is because if we do see a session where we have an impulsive move like this, and we're still not in the trade, we don't look at all, we just leave it. And that's the part I mentioned in the last video, where that is where the element of discretion actually comes into play. That's the only layer of discretion that you really have, which, to be honest, once you gain the experience on testing this model, you won't really struggle with identifying what's impulsive and what's not. You'll know and get more comfortable what you want to be involved in and what you don't. But that's the key thing to understand. Just remember as well, we're not looking for huge moves. We are only trading the M1. We're only looking to catch the move of the session. Don't try and do these high. Don't look to the high time frame. Think, oh, you can hold this for longer periods. The aim is to bank what you can as quickly and efficiently as you can. Because I think what people don't realize is that these consistent 1 to 3s or these consistent 1 to 5s, it racks up massively in terms of compounding. Whereas if you're always searching for those big trades, you realize that you're actually hitting 1 to 3s, 1 to 5s very consistently, but you're not doing anything about it to actually capitalize. And again, the overall aim when it comes to trading is to extract what you can from the market whilst you can, right? So just to go over the model very briefly, not briefly, quickly I would say. Let me draw it actually, it's quicker. So essentially we're looking for a fractal range to be created and that range to be taken out. And then we're looking for this breaker structure. Now this breaker structure is the most important because that confirms whether this was a liquidity grab or not. Then we're looking for a mitigation of that range. Doesn't matter where, can be 50%, can be anywhere. It's completely loose. And then we are looking for a breaker structure again, and then we're looking to enter. Now what we're doing is we either look to enter on the 15 second or we look to enter on the M1 directly. Obviously if we're looking at the M1, sorry, not M1, if we're looking at the 15 second, we are looking for that liquidity grab and that breaker structure. And we're looking to enter either off the first mitigation of the range, or if you're looking for a bit more confirmation, you're entering off that mitigation once you have order flow created. But the key thing is you need to have the order flow on the M1 to begin with to give you that high confidence entry. Because remember, we're trading the M1. We are trying to be as we're trying to trade high probability as much as possible. So let's try and be safe and follow the order flow and what the market presents. And I've realized every time I draw, I always draw it as a bearish scenario. Let's draw the bullish scenario. So this is the same thing where you have a range forming from here to here, then you have break or structure, then you have the official break, which confirms the liquidity grab. I don't know why I called that the official break, just don't take too much notice of that, is nothing important. Then we're looking for a mitigation of the range followed by another break, and then we're looking to enter at the mitigation either of this range, or we are going again to the 15-second and we're looking for the exact same thing where we have liquidity grab, break or structure, enter off the first range, or we enter off the second range. And just remember, the deeper you go, the less frequent the trades come, but also the deeper you go, the higher the probability. However, I already mentioned that is just remember, the more perfect and refined you try to be, the less likely you are to actually be in a trade. So you need to decide, once you've done your testing and understand the edge, you need to decide what is best for you. So as I said, what I'm going to do is I'm going to go through day by day. So we're going to go the week beginning, what was the date? It was the 23rd. So I think I recorded the breakdown on the 25th. So I covered that Wednesday. So yeah, we're going to do the 23rd to the 27th. And as I said, I'm not cherry picking trades. I'll be just snipping every single part, just so I'm not constantly scrolling, going back and forth. I'll stick to one day and stick that in at a time, just so it's clear and concise. Apart from that, I hope you enjoy the rest of this video, and let's crack on with Monday. I'm so sorry to interrupt the video that you were just about to watch, and I hope that you're enjoying it so far. Now, I just want to take a short moment of your time to explain the daily pip cycle, which is our reinvented edge that we've been trading back from 2016. It's been a theory that's been around for decades, and all we've done is improve the entry system to the point where we have a simple, repeatable system which has allowed and given our community members consistency and profitability and having some clarity behind the market. The only reason we've done this is because at the end of 2022, myself and James, we sat down and thought, what can we do to improve the consistency within our Discord? And we worked out and eliminated everything that was holding our members back to create a system where it's one time frame, one pair, same rules, same entry, same stop loss, same target, same session, and it again is following the exact same rules. And when I say it is impossible, and I'm saying with full heart, it's impossible to get any different trade from myself. Every single day you will see a trade being posted by me, and you will have the exact same results that I am taking. Now, we've already hit the 2000% mark in compound gain, and I'll keep updating you. If you follow our Instagram, you'll keep seeing the results. What I'm showing you here now is the student results of constant replication after replication after replication. And these aren't just simple replications, these are replications of every single trade that I have taken. And the reason why they're able to do that is because they are following a simple mechanical approach. If you want to improve your trading, which you clearly are if you're watching this video to begin with, what I suggest that you do is, if you click in the link below, it will be labeled as the daily pip cycle. If you click on that, it will take you to a page where you can join our Discord, learn this edge for a small monthly fee or a lifetime fee, whichever suits your budget. And you'll have an edge where it'll give you so much clarity. You'll have a simple system that you can follow with very little stress, no emotion, no guesswork. It's just simple. As soon as the entry rules present, you execute. Anyway, I won't take any more of your time. Hopefully I'll see you in Discord, and I'll let you get back to your video. Okay, so this is Monday the 23rd. So I've just remembered the session is between 7 and 9. And before I actually get into breaking down this chart this day, I mean, just remember is when you see this sort of move, that is the impulsive move I was talking about. If we haven't had an entry by now, then that, and this happens, then we finish. We don't look anymore. There's no point wasting our time and energy on that. And that is why, you know, this is what's allowed me to be so efficient with my trading, because essentially I am in and out and I don't have to sit around all day, because the idea is you're trying to capitalize on the most impulsive moves. There's no point. Imagine you're sitting, you get into a trade, right? Where say you get into a long here, and this is what price is doing, just staggering, going along. Your TP is somewhere along, I don't know, take out this high for example. Look how long it takes to do that compared to how long it takes to get from there to here, which is the most impulsive move. Look at the steepness of that and the steepness of that, just compare, which is why we look for sessional moves. And another thing to address is, obviously I'm only focusing on London now. I will do a separate video for New York, not that it's any different, it's exactly the same. I only trade London myself, which is why I prefer just teaching London, but I will go over New York as well. So let's break down this chart. Let's use the replay tool and go from here. Okay, so let's recap what we're looking over. We're looking for a liquidity grab, break a structure, and go from there. Okay, so we have, again, we can use previous ranges. So we have previous range from here to here. We have a liquidity grab there. Then we have this break or structure from this range from here to here. And now all we're looking for is mitigation of the range, which is now happening. So mitigation is happening there. So now let me draw that with a box so it's clear. Let's just draw it from to there. Make sure it's exact. Okay, so now we have mitigation. All we're looking for is a break of structure again. So we're just looking for a break of a range, and which we have just here. Now, before I go on, this is not considered as a break of structure to the upside in this case. The only way that we'll consider it going the other way is if it was, so obviously it's taken out the high, but then it's continued. So essentially this is just another liquidity grab, so nothing really to be too concerned about. However, if it did this where it came here, took out the high, then it did this, and then it broke up above, then we'll obviously go in the other way rather than bearish. Obviously I'm looking in hindsight, so I wouldn't know at the time that this price is going bearish, but you have to bear in mind in this situation where every move you have, it can be a liquidity grab. You just have to wait for the break of structure to confirm which way price is going to go, okay? Because obviously a high was taken here, then a low was taken, so that is still telling us that price is still bearish without adding too much confusion. So let's just move it to here just so it's clear. Okay, so what we have is, just to go over, so we have a mitigation of this range, and then we have a break of structure here. Now when we have this break of structure, this is the mitigation, and then we have this break of structure, right? You can enter straight off the M1 of this range here, so from this low to that high, so you can enter off the M1 either on the open, which is, it's going to be 4.6, so we're only going to aim for 3R, is above 3 pip stop loss, which is there, so you can have 3R. Alternatively, you can go to here and you can aim for, because it's below 3 pips, you can aim for a 5R, which is there, okay? And that's just off the M1. Now this is where we can do get our refinement in. So hold on a sec, when did price come back in? Price coming back in here, which was 742. Okay, so we are looking for a break of structure and then the break to the downside. So what we have is, so now that price has come in, this is where it came, this is the last high that gets taken, so we're looking for a break of structure to the downside. So this is the major range that we have. We eventually have that break of structure, which is caused by this range from here to here. So you can enter off this range, which is there, and it just gets ticked in. So go from there. Why is that so big? Okay, 3.1, and because it was over 3, let's go to 3R. Alternatively, you can wait and for the safer option, which is waiting for the next breaker structure. So once we have that mitigation, we have the next breaker structure, which is here. You can enter off this range here. So the range that caused the break is from that low to this high. So once price came back in, you can enter off obviously the open, which is there, and then that will give you that'll be another 3.1. So this will give you a 3R. Let me draw this box out. So it'll give you either a 3R, alternatively price hit the 50% as well. You can aim for there and go for a 5R. It's completely up to you. So either you can have 3 or 5R. It was a winning day, and that's your session finished. So your session essentially could have been done just before 8 o'clock, so before London even started. So your session could have been completed. So this is the obviously safest option, and then obviously when you go back to the M1, your original options you could have done obviously from here, your stop loss just above. Could have done from there or from the 50%. It's completely up to you, but either way you're aiming for 3 or 5R. So that was Monday. Let's move on to Tuesday. Now we have Tuesday the 24th. So let's just go on and see. So we don't have any previous range to cause that break. Nope. So we're just going on to form a low, another low formed, but then we have a break or structure. Now this will be considered as a liquidity grab because a low gets taken, then a high gets taken. That's an LG confirmed. So the low that causes this break comes from here. So this is the range that caused the break. So from here, which actually to be fair is a range in its own from this low to this low. But the problem is now is that we have this impulsive move with no form of mitigation coming back into this range. So no entry, and because after we have this impulsive move, there's no way we want to be involved again. So we would leave this day completely, and I hope that you'll leave this day completely. There's no point entering once you've seen an impulsive move like this, and I believe this is just approaching London Open, so this is just before London Open, and that's the sessional move we want to create. Let me double check break or structure from this. There's nothing that you could have done. It's completely gone with no mitigation, so no entry there. So let's move on to, I've already done Wednesday, which is on the previous video actually, which was on the video that was released on Sunday. So I'm not going to go over Wednesday again. Go back to that video if you haven't, if you want to recap it. It's near the end. You could just snip back to that. So we'll move on to Thursday. Right, so now we have Thursday the 26th. So let's go over this price action. Oh, very very messy sideways. Anyway, let's crack on with it. So what we have is range, break of the high, and then we have break of structure, mitigation, and then we have this break. So now that we have that mitigation, we are looking for a entry within here. Now obviously we clearly lose. Just remember there's a two trade limit per day for me. You can increase that if you want. I don't think you need to. Anyway, so if you're going to enter off the M1, you would enter off this range with your stop loss above. So it'd be 3.9, which you get taken out, or you can do the 50%. Where you enter here, and then you aim for 1 to 5, and again you get taken out. Okay, so that's 2 losses off the M1, and obviously the 15 seconds going to be a loss, but let's go into it. So price came back in 7/19. Oh, I didn't go back to the day, did I? And I said I'm gonna make this clear and concise. Tans. Hold on a sec. We're doing 26th. There we go. Okay, so replay tool. There we go. Apologies for that. Okay, so let's go to the 15-second and go and see if there's any entries here. Okay. So no, we're looking for a high break and then a low. Nope. High gets taken and then nope. A low gets taken. Okay. High gets taken, then the low gets taken from this range. So you can enter off here, either off the 50% or off the open, and you'll lose. So that'll be the first trade. And then the second trade, so we have high, low, taken out, and then you have a break of structure, which is from this range low to this range high. You can either enter off the open, which is here, which gets taken out obviously, which from here, and then alternatively get enter off the 50% as well of this range, and you get taken out as well. So that would be, either way, it's a -2
Tough time never lasts. Only tough people last.
day. So we remove that. Yeah. So currently on this week, so Monday you either hit a 5R or a 3R. Tuesday no trade. Wednesday again it was either a 5R or a 3R depending on your choice. And then Thursday it's a -2, so you're still up for the week in this case. So at max you'll be 8R up, or the lowest you're going to be is 6 take away 2 4. You're going to be 4R up at this point, which for some of you may not seem like a lot, but just remember how easily you're doing this, because it's not requiring a lot of thought. It is simply just reading price action in a very, very simple way. And just remember what I've said in the first video is obviously not to compare to what you've learned in the past and compare to other strategies. Every time you think about a strategy, think about it as it is, and think about the overall goal for your trading for yourself. It's not the case of trying to find the biggest risk to rewards. It's trying to find a consistent way to extract from the markets. Just remember that. Let's move on to the last day, which is Friday. So now this is Friday the 27th. Now before I do anything stupid, let's actually replay it. There you go. Okay, so let's go over price action and see if we have an entry. Okay, so this looks quite interesting. Again, that's the impulsive move. So we don't find an entry anywhere in here, we are completely off. So what do we have? This is the last range. We have this is the range that broke, and then we have a low. So this is a confirmed liquidity grab. We're looking for a mitigation of this range, which doesn't happen. We break above, which is completely fine. Okay, next we have a range from here to here, which gets taken out, and again, and we have another high that gets taken out, and then no break of structure after that. We have this eventual break, so it'll be a no trade on a Friday as well. Let me just double check this to make sure I've not missed anything silly. Break of structure, no break of structure, that's mitigation, failed. Liquidity grab, break of structure, fail, no mitigation. So no trade on Friday 27th. So essentially you'll end the week at either 8R or 6R, not 6R, yeah, either 8R or 6R. Is that correct? No, sorry. You either end at 8R or 4R. That's a bit stupid. Obviously, it's directly half, which would have been perfect for the day, for the day and for the week. And I think, especially when you get no trade days, it's very easy to sort of get upset about not being in a trade. But you have to remember what you've done for the week. That is more than enough. And just remember about the compound gain effect of what will happen in the long run of capturing these moves consistently. And just remember again how simply you're doing this in less than 2 hours of work in most of the trades. A lot of them are just only an hour of analysis really, so you shouldn't really get fatigued, which is the problem I had, is staring at the charts for ages and I was getting fatigued just looking at it, to the point where I was making stupid decisions and rushing into trades and trying to force things. This helps you become a more of a disciplined trader overall, which is exactly what you need for making this a sustainable business for you. But anyway, that's the end of the breakdowns for this week. Next week I'll release a video for the following week's breakdowns, which is the week I'm currently recording, and that probably sounded very, very confusing what I just said. However, I hope you take care. I hope you have enjoyed this video. Please let me know how you're getting on. Post everywhere, post your trades, whatever you're taking, and I do have a look at everything. Although I don't control the Instagram or the emails or any of the comment sections as such, I do glance over them, and if there's anything interesting, I do personally reply to you. So feel free to share wherever you want, wherever you can, if you want to share your progress. And if there's anything that you are finding confusing, and if you share it somewhere, if you share it either on YouTube or Instagram, if I have a look at it, I may discuss it in the next video and explain what you've done correct and what you've done wrong, personally from me. Anyway, I hope you've enjoyed that video. Again, if you want to enhance your trading even further, you can also join our Discord, where you can learn a bigger and better refinement of this edge, which we have is the inception or the disruption model. Alternatively, we do have the daily pip cycle, which is our ultimate edge that we've created for our members, as mentioned in the short clip that you've probably or just already seen. I don't know when that gets fitted into this video, to be honest, but it gets fitted in somewhere, and it will tell you a little bit about it, and you've probably seen it plastered all over Instagram. It's our edge, purely mechanical edge, with no discretion, no emotion, no guesswork. It's just simply following a simple set of rules that happen every single day, and it's less than 2 hours of work. And again, if you want to improve your trading and increase your capital, you can go with Vertex funding, which we do have, and there's a link to all of that in the description below. Also, to mention, we have created a quiz. A lot of you don't realize that we do have monthly options for our Discord, and the reason we've done that is to make it easy and efficient and convenient for more of you to make our content accessible, because a lot of people are trying to buy these fake leaks where you get really old files of our videos from years and years ago, which don't apply to today. You can get the exact same content straight from us, straight from me, for a low fee, which some of you don't know. What I've done is actually create a quiz, which is a link below. That quiz will take you through a bunch of questions, which will guide you to which package is best for you, and it should guide you to a monthly, quarterly, or a lifetime package, depending on what you wish to achieve with your trading. And I hope that helps you decide and limit that sort of decision process for you, and makes it easier in becoming part of the Vertex family. Anyway, I will stop chatting and wasting your time. Hope you take care. Hope you have a great weekend or whenever this gets posted, and have a safe trading week ahead.